Welcome to Investors Insights, where today's topic is Holiday Market Special. We hope that everyone is looking forward to a great holiday with family and friends. But as always, there are topics to discuss in the markets as volatility has spiked, and there was a batch of negative headlines over the weekend that we want to address. So to start, in our first vlog of December, I covered how the market are historically really strong in the last two trading weeks of the year. But so far, that has not played out, as the Fed is currently on a more aggressive, less market-friendly path. And there are new fears, the new COVID variant that is already causing issues around the world. And just over the weekend, President Biden's Build Back America plan was voted down. And while the president's plan would have been great and boosted in spending in the economy, critics of the plan argue that it would have probably made the inflation problem even worse. And so while many see this as a negative development for economic growth, we believe that it's also important to remember that this should be a plus for corporate profits in absence of new tax increases in 2022 and in 2023. So, Ty, talk about the Fed and their latest plans. Look, we talk about the Fed all the time. Their actions and their verbiage move the market. So talk about their latest plan.
Yeah, absolutely. So this December 15th meeting by the Fed was much anticipated. As you said, they moved the markets on that day, on December 15th, the markets shot up, and the two subsequent days took a little bit of a dip. Now, their plan is to accelerate their tapering and end it by March. This gives them a possibility to start doing rate hikes as early as May. Jay Powell also outlined that he may be looking into 3 possible rate hikes next year. That's up from an expected 1. But we want to stress that Jay Powell has shown in the past that he's flexible. If the time comes and he feels that it's not needed, he has shown the ability to adapt, and we can only hope that he continues to stay that way. On a more positive note, the Fed would not do this if they weren't seeing some positive signs. They wouldn't be more hawkish if they weren't seeing these positive signs of the job market, the economy overall. The reason for tapering is to tamp down inflation and cool an overheated economy. Well, they're seeing 4% GDP growth next year and inflation back down to 2.6% and then back to around 2% after that. So not all bad news there with the Fed.
Yeah, Ty, and you made a good point there. The Fed's only doing this because there are positives going on in the economy. And so, Adam, I talked about earlier, we're seeing a patch of volatility here in the last two weeks of the year. Talk about technicals and give us an update on where we stand.
Yeah, thanks, Bobby. So we did see some emotion come back into the markets last week, as you alluded to, hence the volatility that we saw. But even with that said, the S&P 500 came in at a close on Friday at 4,620, giving us a new resistance level of 4,650, new support level of 4,590. So as you indicated too, we have a short week this week along with next week. So we hope to make up some ground here. The 50-day moving average for the S&P 500 is still currently over 4,600, sitting at 4,604. So we do hope that we get a bounce back here at the end of the year, maybe a rally that can send us into some positive momentum heading into 2022.
Yeah, so we're watching our indicators very carefully. So we hope that everyone has a safe and a happy holiday season. And while the market is closed on Friday, we are here all this week, except on Friday, and then we're here all next week to answer any of your questions. So Merry Christmas, Happy Holidays. We'll see you next week. Thanks.